Hello, and welcome to another update video on Bitcoin. I'm here on the daily time frame, and we want to take a look here at the chart in this video. We also want to take a look at the nanostructures, and I think we'll make a small change there. You know, nothing dramatic, but I think we're dealing here with some kind of a triangle on the nanostructure, so we can take a look at that. But again, that doesn't really change here the overall bigger picture. It doesn't even change the smaller time frame. It just kind of gives us a better explanation for what actually price is doing right now. The overall idea remains that we're in a local price range, and the resistance that is relevant for this larger time frame at the moment. The next key decision point, on the daily chart is between 115,425 and 120,404. I just want to highlight again, look, there are still scenarios for higher prices. There is still a scenario that allows price to rally higher either directly, either very directly in a fifth wave from here. I don't have any evidence for that, to around about 130k plus, or we're dealing with a broader correction in an ABC structure in a wave 2, which then would also lead to higher prices. I mean, nothing is guaranteed, but these are the two bullish pathways that I still see here. But please note, and I've mentioned that many times, that the long-term chart is basically full. I mean, the move to the upside here, hold on, the other one is a bit clearer here, that we sometimes use as well. Yeah, because this one shows us that we are, and that's actually my, you could say, preferred interpretation. But again, I'm just for risk management purposes, because it shows us here on the long-term chart. Yeah, this is 4-day. I could also go to weekly. Thing is, 4-day gives us a bit more detail. This is the long-term logarithmic chart, which shows us that Bitcoin is close to the end of a major 5-wave rally. So we don't only have 5 waves complete from the 2018 low, 1, 2, 3, 4, 5. We also have 5 waves potentially complete from the 2022 low. Yeah, but also, if I zoom out even further, we could say we have 5 waves up from the 2010 low. 1, 2, 3, 4, 5. So look, multiple degrees of 5 waves, of 5-wave cycles, are basically complete or nearly complete. Now, again, that doesn't mean I'm calling for a top to be in place necessarily, okay? One key indicator here, for example, that we often use to calculate targets is the, we measure from this low in November 22, we measure the length of waves 1 and 3. We go to the low of the wave 4, and then we come up with the 5th wave ideal target, 130k. Yeah, 61.8 extension. Do we have to get there? No, we don't absolutely have to get there. We're already so close that, in my opinion, a larger degree top could form at any point. Yeah, could form at any point. But that's why we're tracking the smaller time frames, because they still allow for the interpretation that we have not topped. So larger time frame gives us the model. Larger time frame gives us the bigger picture. It gives us the bias, gives us a lot of information of the larger time frame that the smaller time frame just doesn't give us, and tells us which scenarios we can even consider. Hold on, just need to let the dog in, otherwise he breaks in. So okay. So that's what we're tracking at the moment on the larger time frame. Now, that's very important because it means that the macro risk is very high, of course. Okay, on the smaller time frame, we have ranges that we're still watching, support levels on the daily chart and everything, that I showed you. But on the larger time frame, this just gives us the signal. It tells us the macro risk. The risk on the macro level has definitely shifted compared to where we were, look, in the bear market. You have people now enter the space, and they think like, well, this is just going to continue forever. I don't think it will. Yeah, I mean, long term, yes, but you still need to allow for a large correction in a bear market. Now, in terms of support, I have here an estimate on the chart. This is the standard support area. There are people who think Bitcoin could go below 10k in the next bear market. This model doesn't rule it out. Okay, it just doesn't rule it out. I'm just showing you here a standard support zone from this rally. this does technically not even represent the entire wave 4, because that could be way lower. But obviously, I'm not only using Elliott Wave to determine support levels. There are other models that we use in the background. We will have to unpack them, focus more on them when we're getting close to, significant lows. But these other models, these other cycle tools that we're also mapping and checking, tracking, they are good for the overall cycle, bigger picture view as well. They don't really offer you the precision that Elliott Wave gives us on the smaller time frame. So while they are nice, simplistic addition, Elliott Wave is the tool to use to understand, especially on smaller time frames, what's going on, but also in a larger time frame, right? It can just, however, help to give and build confluence. Now, one of these models, for example, is the power law. There are different ways of applying the power law. You might know that one. There is not one correct version. It's like a family of tools, but this one shows us a support line, for example. Yeah. And currently, this support line is located, again, this support line was never broken to the downside. Yeah. And again, there are different models. Currently, the so-called fair value is around 109K. That's the blue line. Bitcoin's price is moving around this one. And, the lower boundary, this support line, was never broken in its history. Okay, it never got broken. There are some models where it got broken slightly. In the model here that we use, it never got broken. And so this is going to be a very, very important line to follow in the next bear market. Now, again, with every model, every cycle, things have to be maybe slightly tweaked, slightly adjusted. That's just normal to make the model fit for future cycles. But just to give you an example here, there's a fair value line that, again, it's not for precision, but it tells us kind of... it gives us a roadmap as well, right? And so, for example, 2030, when was the... Yeah, so it takes us to 1 million in 2033, roughly, right? So that's the power law. But that's not, it also gives us prices above that line, below that line. What I actually wanted to show you is this lower boundary, because it shows us where currently support is, and that is around 40K. Okay, so that, again, that doesn't mean we have to exactly get there, but it means that it's going to be a line that is going to be relevant, and the further we go along, the higher the line goes, and maybe we will not break below 50K, right, or 45K. And so this is going to be something that we are definitely going to focus on in the next bear market, and not as an absolute line that, has to hold, because whenever that's the case, the model will break. When too many people believe it will, like, stock to flow, which kind of is a flawed model as well, right? It kind of, people don't really follow it anymore, and so but that's different. Stock to flow is different to this one here, which is deeply mathematical. So the power law is kind of a universal principle. So and this kind of aligns very well with this Fibonacci support area, right? So now let us take a look also at the shorter time frame, and here I think we need to make a small adjustment. I think we need to have a triangle here, and I think price action. I think what happens here needs to represent that, or the Elliott Wave structures need to represent that we're possibly dealing here with some kind of a triangle pattern. Okay, now it is super messy. Now I think it's important to understand that what we could be dealing with here is obviously this broader bounce that's unfolding, and that would be the yellow scenario that we've already bottomed here, and the price could move into that resistance area we talked about. Well, if that is indeed the case, I think we just need to recognize we could be dealing here with a triangle pattern, which is labeled A, B, C, D, E. And I think if we track a triangle, it would be A wave up, B wave triangle, C wave up, to take us into that, let's say, resistance area above. Yeah. And then the triangle count itself is A, B, C, D, E. There's something to track. This can still extend. And I think that kind of, at the moment, is at least what I would like to be tracking, because we're just moving correctively up and down, but this can still extend, yeah. So, for example, it's entirely possible that we're now forming this this larger triangle. There is a directly bearish count, but again, honestly, it's not really following through to the downside yet. That would be the orange scenario in which we have a 1-2 setup. And I mean, is this another 1-2 setup? Maybe, but the bears are just not clearly following through. Okay. So for now, that bounce into the resistance area here would likely be an A, B, C structure. And then that would align with this B wave here on the daily chart that could take us into this resistance area. So for now, I think I still have it marked here with a question mark, that we could have bottomed here, and this is a triangle, and we go higher eventually here, just simply because there is a lot of volatility here. And if it breaks below the support area here, 108,580, it'll likely dive lower. Because we have not really broken above any critical resistances. So a level that would confirm further an upside breakout here from this triangle is this level at 113,500. That's the update on Bitcoin. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And yeah, if you're interested in further updates, make sure to follow our membership. Also, feel free to follow us on X for additional updates, charts, much more. You can find the link in the description and in the comment section. Thanks so much. Bye-bye.